attitude of gratitude is everything, brother. I learned that a long time ago. When I can relieve myself from the bondage of self, I don't think about much, but all I think about is me. If I could get out of that.
The Apartment Gurus podcast is brought to you by Greenlight Equity Group, an apartment acquisitions and holdings firm co-founded by Carl York and Tate Siemer, host of this show. We offer you the opportunity to be an owner of cash-flowing, wealth-growing apartments without the headaches of being a landlord. These assets are recession-resistant, risk-mitigated, offer significant tax advantages, and are a great alternative to the stock market. Ready to check it out? Go to www.investwithgreenlight.com today to book a personal consultation with Carl or Tate. Again, that's investwithgreenlight.com. We look forward to meeting you. Welcome to The Apartment Gurus, where twice a week, host Tate Seymour brings you deep dive interviews with the wisest gurus in the apartment investing industry. These experts are sure to create game-changing value and inspiration designed to catapult your business to the next level. Be sure to reach out to Tate at www.investwithgreenlight.com for access to his investor portal and Calendly link. And now, here is Tate Seymour and the Apartment Gurus.
Welcome, everybody, back. Another episode of the Apartment Gurus podcast. And I think you guys are going to love this conversation that Dave Seymour and I are about to have. Dave is a mentor, a thought leader, and somebody that is very experienced in the commercial real estate space, and it's particularly in Florida, right, Dave?
Yeah, we're primarily based in Florida. Hey, I know it's an election cycle and I don't want to get too political, but we love the red states because we love being loved.
Well, yeah, no matter which way, if you're an honest progressive or liberal leaning or even middle left, you'd be lying if you said that it makes sense to invest in states that have some of the laws and taxations and everything else. Yeah,
I have a push and pull, right? So I'm sitting in my house. Actually, I'm working from home today, and I live 25 minutes north of Boston. So I'm in one of the most liberal states in the country, right? And I have peers in the development multifamily arena up here who make a really strong argument as to why a dollar bill can work very, very hard in this environment. And yet, all, if not most of my portfolio of my business at Freedom Venture Investments is in the southern states, right? I like Texas. I like Florida. I like that southern feel, and I like the taxation environment. So the argument is interesting, Tate, because what my guys will tell me is, if you know how to not work the system, but work within the system, if you really understand the rules and regulations of how to operate in development and multifamily, you can do exceptionally well as a company, for your investors, and for your tenants. But, and here's the but, the amount of work it takes and the amount of resistance that you feel during that learning curve can put a lot of people out of the game, which is why you get in New England what we call the old school, right? The old school mentality. It's not what you know, it's who you know. So I don't think there's a right or a wrong. At the end of the day, I got one job, and that's to be a really, really good steward of the capital of the investors' money that comes in with us. That's my number one job. And if I can do that, if I do that well, I'm okay. You know what I'm saying?
Yes, I do. That is 100% the mission here. And we like to put our community residents in a pretty close priority. We figure those two groups, if we're serving those two groups of people in our world, the very, very best we can, that we feel like things will work out and fall into place, and residents and investors for us, for sure. And
you start talking about the tenant base, right? And there's the misnomers that they don't carry the amount of value as the underwriting of a pro forma or the market in which you're investing, or whatever line of BS you want to put out there to convince yourself that the tenant base is not the lifeblood of your business. And I've owned properties in C/D neighborhoods, smaller portfolios in some pretty rough areas. I was a firefighter and a paramedic in the city of Lynn, Massachusetts. And when I started in this game, I'm right in my own neighborhoods. And Lynn's a tough town just north of Boston. But at the end of the freaking day, dude, it's the tenants that go to work, right? They're the ones that go out and trade their time for somebody else's money. And then they give us that money. Be respectful, right? Understand they are human beings. They want to be safe. They want to be respected. They want clean, decent, affordable housing. And if you can create a community environment for them at the same time, that's the typical win-win-win we talk about. So to anybody who's listening to us, take care of your tenants, look after them, love them, and they will love you back.
Love them. Yeah. Love on them, love on your property, love on your amenities, love on your common spaces. And which all serves the huge purpose of loving on your investors, because at the end of the day, what is providing the healthiest, safest, most kind of like community oriented surroundings and environment for people to live in, grow up in. These are kids that we're talking about. In a lot of cases, and like I think it's almost like, to me, it's like almost a sacred trust that they inherently have to put in us as yes.
I like it.
So I don't know, and I know you are too. The whole service aspect of what we get to do is, once you're in this long enough, I think that's really become like a huge part of the juice in this for me.
Yeah, tell me what you think. Here's one of my biggest angsts or biggest challenges around our industry as apartment guys, right? There is an inert marketing message that goes out to the business side, right? That says, get rich. There's a few clowns out there that we all probably know that will sit there with $1 million in cash on their table and tell you, if you learn what I know, you too can have $1 million in cash sitting on your table. You too can fly around in a private jet. You too can, have a Rolls Royce. Yeah, baby. Yeah, baby. Yeah, right. And all of this BS. And it attracts the lowest common denominator of investors and business owners into our space. And I'll be frank with you, Tate, my voice isn't loud enough. And my marketing budget isn't big enough to compete with the clowns that are out there doing that. So unfortunately, they take up a pretty large portion of the education, we'll start there, of the education space that is out there around multifamily investing. And the challenge with that is, like I said, it brings in this low base common denominator that's just looking for, cars, boats, and leather coats. And they don't understand the ethics that you and I believe in when we do this business, right? Which is what we just discussed, taking care of tenants, investors, property, et cetera, and they come in there, and you get a lot of syndicators who come into the marketplace with little or no skin in the game. And what they're doing is they're just coming in, trying to hit the deal, make the buck, and then move on without having the real value component in a transaction. So for me, I can only talk about it in environments like this, where I'm with like-minded, good people who want to do a good job and take great care of them, and try and make my noise as loud as I can with regard to attracting the right people into this business. So you've got it on that side. And then on the other side of it, you got the money side. You've got the uneducated, accredited investor who sits at home with 3 or 4 PPMs, right? And they're flicking through the PPMs. And because they haven't come up the education gradient enough themselves to understand what it is that they're actually reading, all they look at is cash on cash returns, IRRs, equity multiples. And if you ask 99.9% of those investors, define for me what an IRR is, they have no freaking idea.
Yes.
They got no idea.
My perception is the number one metric that people toss around. That cash on cash, of course. Yeah.
Yeah. Look, I'm a simple guy. I'm a blue collar guy in a white collar world. And for me, I like the equity multiple. Now I've got a team that can, rather.
I love the equity multiple.
It's simple. It's
the easiest one to get your head around, and it's accurate, right?
right. It's accurate as long as your underwriting is, and you have a.
It's a single reflection on exactly what your return is. I mean, it's literally saying you invest this, you multiply it by this number, you're going to get this return back.
Yeah.
The 2x in 5 years to this point in our progression in our acquisitions has been a target, right?
That's what you shoot for. Same thing.
Yeah. Oh, wow. Well,
that's what I shoot for. If I can,
I'm right, I guess.
Tell you, if I can underwrite a deal where I can double my money in 5 years, and I'm an investor looking at that deal, and the deal makes sense, the story makes sense, the operators have track record, they make sense. People want a good story, man. They want to understand why their money is going to work with such velocity in a certain marketplace. And there are so many people out there that cannot answer that question appropriately, right? They don't know how to reply to that question of how can you double my money in 5 years? And you guys like you and I can go in there and we can look at, 4 or 5 points of underwriting showing, trends in a marketplace, supply and demand, absorption rates, capitalization rates, debt to ratio incomes, blah, 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 the numbers and the data that we live in all day long. And the more that I simplify a deal, Tate, and this isn't a disrespect in any way to any investor, but the simpler I make my deal, the simpler I make the offering, the easier it is for somebody to make a decision. Because at the end of the day, I want a yes or I want a no. Because a maybe don't do me any good, man. Your maybes are no good here. I would rather hear a no over a maybe. You understand what I'm saying?
Well, and I think that, like, John, and hopefully it comes relatively naturally to the listener to take complexity, which is a commercial syndication, and distill it down to the essentials in a way that is fully informative, fully comprehensible, I guess you should say, Tate. And I forget who said, it might have been a Tony Robbins or a Joe Dispenza or somebody, but like a confused mind says no, right? A lot of times that no just means I don't get this, or there's something fundamental here that smells a little weird to me and I can't like totally get my head around it. And that's so often going to be the case because there are too many, LPs, retail level investors out there that are really seasoned in breaking a commercial real estate deal down. And
for sure.
Yeah.
I had an investor come in on one of my deals. It's a 106 unit apartment complex that we're doing a ground up development in Fort Myers, and going through the database, going through the conversations, the one-on-ones. And this guy was a referral. And if you want to talk about off the chart smart, that's this guy. He's got degrees up the yin yang. He works in insurance at an exceptionally high level. I'd love to break his anonymity, but I won't do it. But if you look at the top 5 insurers in the nation, he's one of the CEOs of one of the top 5s. So when you look at his accredited investor form, he's probably bringing down $800 a year in salary, and then another $800 in bonuses. So a very nice hire and a high net worth individual. And we're discussing, and it was a 2x deal. It was a 2x multiple on his money. He was coming in a fairly de-risked part of the process. He wasn't in land acquisition and entitlement. He was like the next phase on. So instead of the 3.4x the early guys were looking at, he was looking at a 2x. And he had that question that we're debating right now. How the hell, Dave, can you, double my money in 5 years? I hit the points. And you can see in the Zoom conversation with him, the lights are coming on, like he's getting comprehension on it. And then he asked me the question that I always want to hear from every single investor. He says, what's the worst case scenario in this deal for my money? And I said to him straight up, SEC compliance, my PPM, and our conversation right now goes 0 degrees. Are you listening to me? He said, yes. I said, you can lose every single dime that you put in this deal. Every dime. I said, but what if? I said, what if worst case scenario wasn't that? And all it was you got your money back. Now, the reason that I do that is I'm gauging where they are in the journey of education. How far are they coming up the gradient? And he said to me, he said, if all I wanted was my money back, and this is where I got it, Tate, he said, why don't they just leave the money in the bank? That's what he said to me. And I'm like, gotcha. Like I could educate you now. And we were right at the point of seeing the rise in inflation. And I said to him, you know, your money in the bank is working in an inflationary environment where your dollars are devaluing every single day. I said, the buying power of your $1 bill is probably around a nickel right now due to the amount of capital that's been infused into the marketplace. I said, when you begin to take into consideration how we can velocitize your money, make it work harder, and then on top of that, the potential tax benefits that you will receive on top of it because you're a high earner, I said, let's start talking about some scenarios on the other end of the scale. And that was it. That's what got this guy over, you know, and I think he came in for 100, 150 or something into the deal. But that conversation for me, again, a blue collar guy in a white collar world, like I say this with respect and love and never to demean, but I have met some of the smartest dumb people in the world in this industry, man. Doctors, lawyers, bankers, accountants, like high earner individuals who don't live in our world. You know what I mean? They don't understand the benefits. They don't understand cost segregation. They don't understand, you know, depreciation. These things are such incredible tools that we have in our toolbox that we get to share and open up the toolbox. You know, what do you want today? You want a 1031 exchange? Let me walk you through that. You know what I mean? So I get a kick out of what we do, man. It's a powerful place to be. I feel like the Wizard of Cash sometimes, you know what I mean? Like working the Harry Potter wand on returns. It's good.
Wizard of Cash. Yeah. Well said. Maybe that's personal branding material for you right there. Like on the spot. Wizard
I'd probably get in trouble if I did.
Dave, speaking of like, I mean, that you really lit up when you got into that, kind of walking him through that.
Yeah.
Like, it kind of makes me wonder, like, big picture. I mean, everything that you've done. And by the way, I want the listener to be able to really get a feel for going from being fire blue collar space, quote unquote, TV personality, major influencer. And it seems like you're having a ton of fun. Like you just have this, even on your LinkedIn profile, man, it's like,
yeah,
this guy's into what he's doing. And it has a lot of joy and a lot of juice in it. Like, so where is it? Like, I think there's different points that we all get, like the juice from our businesses or our mission, our purpose. Like, what is it for you?
Yeah, that's a great question. And it's, you know, it's personal. Everybody's got that moment of clarity in their life where they're either up against it or they don't know which way to go. And I'll be brief on it, Tate, but it's important. It's really part of my journey. I emigrated from England. I was 20 years old, and I came from a culture that was just engrossed in alcohol, right? I grew up in the pubs and clubs, right? Real men drink. That's all I knew. Like, that was so engrossed in my culture. And at 23 years old, you know, booze had beaten me, and I got sober. I got sober at 23 years old. I'm now 58, so do the math. It's been a few 24 hours without a drink, but I would love to tell you that being sober was my catalyst into business and everything else. It wasn't, because the other thing I brought from England with me was financial illiteracy, right? My father, I love my old man dearly. He's 81, 82 years old now. But his only guidance for me was trade time for money. Like I said earlier, right? Get a job, David, do the right thing, son. Don't ask questions. You know, I'm a London boy at heart. And, you know, that journey of being sober took me on a personal, discovery, if you will, about who I am and the way I operate. And being a firefighter was such a cool job for me, man. It was that service piece, that camaraderie piece. Like, I loved it. And because I was good at that, I thought I was okay to spend money, keep up with the Joneses. So let me tighten this up a little bit, because it could be a long story, and I don't want it to be, you know, all about me. But you asked me where that juice comes from. That juice comes from the financial crash, 2006, 7, 8, 9. During that period of time, I was working 120 hours a week between 3 full-time jobs because I didn't know how to manage money. I was a father. I was a husband. I had one son at the time. My oldest boy Robert, I was carrying about $80,000 in credit card debt and I was losing my house. And it was the closest I came to picking up a drink in, at that moment in time, 14 years. Like I was up against the wall. Being a man of faith, I'm screaming and shouting at my God. And I'm like, what's up, dude? Seriously, I'm in my pickup truck, my F-150, and I can go back there and the tears will flow. I'm angry. Like it's my manhood. It's my identity. It's everything. And I'm screaming, help me, help me. And I heard nothing. And I figured, all right, it is what it is. I'm going home. I'm telling my wife we got to move. We lost the house. And as I turned on the radio in the car, a commercial came on. When I turned on the ignition, it was on BZ radio. And the commercial was Teach Me Foreclosure, a free 1.5 hour real estate seminar coming to your neck of the woods. Learn how to do real estate with no money down.
Was it Carlton? Who was it?
It was Whitney. The next best thing to Carlton, it was Russ Whitney, dude.
Yeah.
If I told that story in the boardroom with the CEOs of the insurance companies and the private equity guys and the venture capital guys, they'd think I was a complete and utter moron. When I share the visceral response that I had that day with people who understand, small business owners, even a doctor who's just busting his or her ass every day trying to get through, not getting sued, and they want protection for their family. When I share the visceral nature of that story, they relate and identify. And that put me on a trajectory that I never look back on. It put me in a place where I learned real estate from gurus, right? This is the multifamily gurus podcast, right? The apartment guys podcast.
Apartment gurus, yep.
Apartment Gurus podcast. And it's like, I followed gurus, but because I followed them and then kind of became one of them, because I ended up in the teaching space, because I was actually doing what I invested in to learn how to do. I actually did it. I got on the other side of it and I found that there were guys out there that were not good guys, man. There were not good guys in the guru space. And I couldn't sit right with it. And, it put me in a position today where if I can highlight the value of great education implemented and supported, now I'm on. Now it's showtime. But again, it goes back to what I said, Tate. I'm competing with a lot of noise out there, right? You can make $20,000 a month in 6 weeks following my new program. Shut up. It's hard work. It's detail. It's systems. It's falling forward over and over and over again. It's paying for other people's mistakes. It's making your own mistakes. It's never giving up. It's going home late at night and saying, honey, I think I blew it. And my wife's saying to me, go get him, killer. I'm proud of you. I love you. Go again. I say, okay, baby, I'm going again. And getting up and going again and again and again. And if that's too hard for a listener to hear, good. Learn how to be a passive investor. But if you believe, you and I were talking before, like you have made choices in your life, Tate, that put you on a trajectory that you're on. Multiple business owner, et cetera, et cetera, et cetera. You have that drive, man. I know what it's like to run just one business, let alone 3, right? You have that drive. And that's where mine came from. It came from God through sobriety to me, to my family that supports me, and then to my investors who support me. And they said, I had one investor say to me, Tate, he said, Dave, here's the deal, dude. This was a business owner owned like a printing company, T-shirts and branding and hats and all that stuff. Been in business for 30 odd years. He also did all of the stitch work for like the Massachusetts State Police. So this guy was established. And he said to me, I understand 85% of this deal. He said, but here's what I do understand. He said, I'm going to be betting on the jockey and not on the horse. He said, so don't fall off of the horse with my money, right? That's what he said to me. But this was a guy who built something from ground up. And, I've kind of followed that trajectory myself. So, God drives the bus. I try to, stay in his will, not mine. I always try and park my ego at the door. A lot of ego in our business. And I try to park it at the door, stay humble, be of service, And I tend to find things go well when we do it that way. So I got a little soapboxy there, man, but you asked the question, brother.
What it is for me is you do it from the heart. Like you said, you leave ego at the door. I mean, like that's exactly the space that you create when you talk about what you're up to and what the impact you're making and the way that different aspects of business residents. I mean, and the other thing that to me is there that you didn't really verbalize, but it's just pervasive, is just a sense of gratitude.
Oh yeah. An attitude of gratitude is everything, brother. It's absolutely everything. I learned that a long time ago. When I can relieve myself from the bondage of self, right? That's really what it is. It's like, I joke all the time. I don't think about much, but all I think about is me, right? If I can get out of that, if I can seriously try and walk just a couple of steps in the shoes of, again, our investors, our tenants, my contractors. I mean, to walk by 106 unit apartment complex being built and know that what we did as a company created 200 jobs, created a demand for, materials and supplies. When fully occupied, will create 106, workforce housing units, which are so in demand in that marketplace at an affordable rent, not, the higher crazy rents of the sexy Florida marketplace, and then have the city, state, or community in which you're working in thank you for doing that work, right? And expedite. I mean, you can get a little big-headed with that. But I also know that, what goes up will come down, and whatever you see on the way up, you're going to see it on the way down. So make sure. You're going to love this. Guy said to me the other day, he said, it's nice to be important, Dave, but it's more important to be nice. And I went, yeah, that's it. Boom. Right. That's the one right there. So,
I like to think that I am a heart-centered guy, and I know I'm anything but perfect around that. But I don't know. If anything, it just feels like that's the way I'm wired, and that's the way I want to be. And life is most wonderful for me when that's the space that I'm really living from.
It feels different, doesn't it? It feels different.
Yeah, it really does.
Not about you. I can feel.
You talked about that visceral thing.
Yeah.
Yeah, you mentioned that visceral feeling that you had. You reminded me of a couple like just key pivotal like flash of light moments in my life where an idea just came into the space. It was a form of a piece of mail, an offer that got me back into school and had me finish my degree, and that I otherwise probably wouldn't have had happen. And I had this visceral response, and I keep in mind I was 20, maybe I was probably 20, 21 at that point. And I remember feeling like I could do Forrest Gump right now. I could literally run across the country and back. Like I've got so much energy, right? It's like, and you know it when you feel it. And I've maybe had one or two others that were that maybe are close to that potent, but like, yeah. And you kind of remember where you were, and
you do remember where it's almost like the folks who talk about knowing where they were when JFK was assassinated. You know what I mean? It's like, it's that much of an impact, right? Like I know where I was when they hit the towers on 9/11, right? And I know where I was.
Yes.
And I went exactly where I was parked when I turned the key in the ignition in that truck. And I drove like a lunatic. I drove like a lunatic home. And I came through the door like on fire. And I said, baby, I got it. I figured it out. We're going to be a real estate investment company. She's like, what are you talking about? My wife early on, she was kind of like it. We started as a couple, right? We're going to be a family-owned business. And we were probably 90 days into doing the business, and I'm still on fire, right? I'm Hurricane David. Like I'm the tornado, the whirling dervish. And I remember coming home one day and my wife was standing in the kitchen and she was bawling her eyes out. I'm like, baby, what's the matter? She goes, I can't keep up with you. I can't. You ask me to do these things and I don't even understand what you're asking me to do. And then you get upset because they're not done. And that was the day that I kind of realized everybody doesn't operate in this brain, the same way. I don't know about you. I take it for granted sometimes that everybody is wired this way. Why are you not wired this way? Is there something wrong with you? But I tell you what it did do for me, Tate, was it gave me understanding. Once I went into entrepreneurship from employment, I then began to realize why I wasn't a great employee. Because I always had a better idea. Always had a better idea. You know what I'm saying?
I think there's real broad strokes here. There's an ownership mentality and there's an employee mentality. I think it's a spectrum. I think there's a like high level management that thinks a lot like owners think and that sort of thing. But when you're a creator and visionary, right? Like when you kind of can connect the dots and see the big picture and then inject your vision and your idea and your passion and excitement about what it is you're up to. Yeah, that's kind of when the magic happens, and you don't want to be constrained. It's like
right.
It's like Sting when he left the Police, man. He's like, I don't want these guys anymore. I want to just do it. I want to go. Yeah. And you mentioned the world furbish thing. Like I can relate. And when I got into this with my partner Carl York, who I love, and we've had an incredible run. Like I was the tornado and really on fire, like he says. And for him, it was, we had left kind of the single family and construction, did some land entitlement, local stuff in Utah. He just wasn't there. And we've worked things through and are, still best buds after 24 years of knowing each other. But you're right. You can't expect, when you're in that role, you can't expect really anybody else to be there with you. Even a 50-50 partner, like there's other points of value that they can bring that, arguably pull that weight, but it's not going to be that visionary thing.
Mm-hmm. I went through some of what you just described there with my ex-partner on the TV show. That whole imagery that was created through reality TV, right? Flipping Boston on A&E Network. It was an interesting time.
It's the elephant in the room I didn't bring up. So let's say it's okay. Listeners are going to get a little intro on this one, and we'll mention that coming in. But yeah, it's a major star or TV star.
It's all good, man. I mean, it was interesting. I told you, I ended up as a student in the seminar world, and then I actually did, what I was taught to do, which I guess was a rarity in the seminar world, but it was the last $27,000 that went on my wife's credit cards for education. It was 5 classes with Whitney, and I only attended 3 of them. I went to 3 of the 5. It's like I'm on fire, like we said. But anyway, long story on it. Because I did what I invested to do, I got recognized by the gurus. And then they said, well, you go teach. And I'm like, what do you mean go teach? I'm still trying to get out of $70,000 or so dollars in credit card debt. I just learned how to negotiate a short sale. What are you talking about? Go teach it. They said, you don't have to be the guru. Just, be a proponent, be the storyteller, tell the system. If the guru's doing what he says he's doing, can you tell the system? And I learned how to present from stage. And that put me in rooms with some pretty cool people, Russell Brunson, Gary Vaynerchuk.
My boy, that's my guy right there.
Yeah, I mean, all these guys are they were all kicking around on the periphery, Tate. You know what I mean? Like, I'm not saying we were buds hanging out, but there was influence. There was words that I had never heard before. There were sentiments that I had never experienced before from these guys. And it was Russell Brunson who sent a link to the TV show. This was like 2009, early 2010, when the market was still donkey, dude. It was bad. Like people would say, what do? You say, I'm a real estate investor. And they'd say, oh, I'm sorry. Like you had cancer. They walk away from you.
It didn't start back till 2012-ish. Like, I mean, and then it wasn't anything like to shake a stick at for 3-4 more years, really.
But it was what you were doing during that period of time. Like we learned how to negotiate a short sale, do a loan modification. Like we make hay when the sun was shining. But anyway, it was Brunson who gave me a link to the TV show. And I filled out an application for this TV show, loaded it with profanity because I've been around enough marketers to know I got to be different from everybody else. And when we connected on that show, I called my partner, and it was a real loose relationship with Pete at the time. And I said to him, hey, I put in this application for A&E. I told him you were the Greek money guy who was a designer, and I'm the firefighter contractor. They seem to like it. They want to come do a little mini shoot to see if we're any good. And he didn't believe me. He thought I was breaking his balls. I said, no, it's for real. They're coming out. And we shot like a little silly, 20-minute thing, a job that we were working on. And that's how we got the show. But from that point forward, there was a little undercurrent, if you will, of tension, right? We talked about who's got what skill sets and can you park your ego at the door. And there was a little bit of this with that over time. I didn't want to be a detail guy. It's never been my forte. My forte is what we're doing today. Speaking from the heart, communicating, getting on a stage, closing the deal, getting people in the room, getting folks excited. And it ran its course. It ran its course at the end of the day. I didn't want to compete to have 100% attention. But that being said, we also stay in touch. We're not hanging out anymore. He's gone off and done his thing. I'm doing my thing. But it put us in places and in rooms that I never imagined I would be in. When you're sitting on set with Squawk Box, Joe Kiernan and Becky Quick and the rest of the crew there, and it's like, are you shitting me? Am I really sitting on this set? You're on the Tate show.
It's an amazing arc, Dave. It really is, like the arc of your career and your life. Just for reference, what was the last year you were a firefighter? Like, what was the year of the Russ Whitney revelation?
So I got on the fire department in 96 and I did 16 years. So do the math from there, 96 to 14. So about 2000 and late 9, 10. That's when I'm doing Whitney. And I got the TV show late 10, early 2011. The early intros to Flipping Boston were the real estate market's in the crapper. And if you want to make money, you got to know how to move fast. I'm Dave. Right? So that was like the intro to it. And then as we did 4 seasons, 29 episodes of that, we went through the market cycle. We went through the change in the cycle. So the intros actually had to change for seasons 2 and season 3 as the market had adjusted for that. But what it did was it opened doors that most other people would never even be able to knock on, let alone have the door opened. It put me in rooms with some serious people. And could I have done better? Could I have really branded it out and been that, nationwide? Maybe. But again, man, I don't know if that filled a grateful heart to do that. That was so egocentric that I couldn't live with it. I couldn't stay in it any longer than that. I like to go to a room with maybe 50 or 100 investors in it, make a presentation, get a couple of verbal commitments, follow up with a few phone calls, and then watch their money grow on an investment. I mean, that's what gives me joy today. So it's kind of cool.
It's the simple thing, man. And it's the bread and butter. It's the balls and strikes and the waxing on and waxing off. Right? So I get it. That didn't come out right. We might have to edit that one.
We won't. Leave it alone.
Okay, we'll leave it.
Leave it.
Just leave that. What's the objection that when you do a live presentation or what's the one you hear?
There's a number of them. It's like I said to you earlier on. The one I always want to hear is what's the worst case scenario?
Yeah.
I want that objection because what it does is it really qualifies that client, right? We're all looking for an avatar when we're raising money, and we know who they are. There's somebody who's done a couple of syndicated deals. Some have gone well. Some have been challenged. So they understand the world in which we live. So if I hear, what's the worst case scenario, then I'm happy. I want to hear that because I can be frank with them. I can tell them exactly what the worst case scenario is. Like I said, you can lose everything. But what about the best case scenario? What if? What if all of this underwriting, what if this 70 plus years of experience that you're now banking on my company, what if it performs better than the pro forma? What if we do better than the targeted return profile? What could that be like for you? And are you prepared to come on this journey with us? Because at the end of the day, an educated investor will be a better partner. That's really key. An educated investor will be a better partner because that's what we are. We are partners. And I've got the ones that are in our ear talking all the time. They're usually the ones with the least amount of money in the deal. And then we got the ones we talk to quarterly as there's an update, and they've usually got millions of dollars in a deal. So, objections are varied, but an objection is nothing more than a question, right? It's an insight. It's an opportunity for you to qualify that client. And to be frank with you, Tate, I've turned away money because the way they operate around money in their head doesn't jive with the way we do. These are illiquid investments. The money goes in, it goes to work, it churns, and it begins to churn and burn. It's not day trading. So, that qualifies a client when you get those kind of objections as well.
One last shot at shooting a 3-pointer here and see if we can get it to go. Any other just favorite kind of one-line closes?
Watch this. This is not for you. That's a one-line close. You like that one. This obviously isn't for you. And that's okay, Bob. But before I leave you, please read over the materials. And if it's not for you, can you please share it with some of your friends who it is for, and then leave it alone? And I don't mean that to be cheesy as what we call the takeaway close. But at the end of the day, that's the last little piece. It's FOMO. And if you've done a good job as a closer, you've showed them all the opportunities that are out there. Bob, you can leave your money in the bank account and devalue your dollars on a daily basis. You can give way too much money to Joe Biden or Donald Trump. It doesn't matter. They're all going to screw it up for you. Makes no difference, right? Or you can, leave it in your 401k and watch compounding costs just chew away at your compounding return profile. You can keep on giving your financial advice. And I never advise anybody, Tate, to do all or nothing. I don't ever say take all your money out of the current investment environment and put it into alternative investments, because I'm not a financial advisor. I'm a sticks and bricks guy. But just being able to show optionality to an investor and then get them to that point of this could be for you. Would you like me to share our next investment opportunity with you? If you would, I could maybe do that for you, Bob, if you want me to. I don't know. Can't be attached to it all. I gotta be detached from it. Otherwise, it's it can be a little bit challenging with them. So anyway, we could do another podcast just on.
Let's do it. I'll take you up on that anytime, Dave. This has been brilliant, sir. Thank you so much. Really enjoyed it, and I know the listener did too. And always here for you, man.
God bless you, brother. Thank you.
God bless you. Yeah. God bless listeners. We'll see you on the next episode, everybody.
This episode of The Apartment Guys is being brought to you by Greenlight Equity Group. Greenlight Equity Group acquires and operates cash-flowing multifamily assets in progressive metropolitan markets such as Salt Lake City, Idaho, San Antonio, Oklahoma City, and Columbus, Ohio. Greenlight targets consistent, solid returns for its investors and a healthy environment for residents by operating high-quality, safe, clean, affordable apartment communities. To learn more about Greenlight and to sign up for the investor list, go to www.glequitygroup.com.
This has been The Apartment Gurus with Tate Seymour. If you enjoyed this episode, be sure to subscribe and leave a rating and review on your favorite podcast platform. To contact Tate, go to www.investwithgreenlight.com for access to his investor portal and Calendly link. He loves to hear from you and thanks you for being a valued listener. Just a reminder that you are the guru. See you on the next episode of The Apartment Gurus.